Good afternoon to our CLA family members, clients, community partners, and friends. Welcome back to our live stream. We sincerely hope that you're staying safe and healthy at this time. Today we are joined by Ben Darwin from our real estate group. Ben will be covering a new tool that assists us with year-end planning, and he's also going to talk about why holistic year-end planning is so important, especially in 2020. So welcome, Ben.
Glad to be here. Thanks, Leslie.
We also have Jack Rybicki, our good old friend, joining us to give us updates on the most recent and relevant PPP questions that we are seeing from viewers and clients. So Jack, we are thrilled to have you.
Great to be here.
So before we dive in today, we do have some housekeeping and announcements that we want to cover. We wouldn't be having a live stream if we weren't pivoting with our technology. So we do have the ability for live Q&A during our session today. In order to participate, you either had to register in advance or you can register using the link you see below me. We have moderators that are standing by and they are ready to engage and interact with you. A couple other quick announcements that I wanted to mention. Ben and I are going to be focusing the first part of our conversation today on the importance of year-end planning. So we do have a couple other opportunities that I wanted to mention where we're going to be doing deeper dives in 1-hour sessions on this. On November 11th, we have a 1-hour year-end planning webinar that's coming up. And so we encourage you to go out to our website and register for that. And then additionally, on December 2nd, the Professional Service Organization industry is hosting a webinar that is specific to year-end planning for that industry group. We're going to have a few more that we have coming, but those are specifically already on the calendar. And so we're excited to share those with you. So lots of great stuff in the works. And that is a fantastic segue to bring Ben back on. So Ben, welcome to the show today. We are thrilled to have you. And what I want to start talking about is the fact that back in May, you developed this opportunity assessment tool that we have morphed over time. But why don't you just start talking about, why we developed this tool?
So, that's a great question, Leslie. The genesis of why came from a client phone call that I had, and the client, I think it was in March or April, and the client said, "Hey, I'm hearing about a ton of tax law changes. We know we've heard about this PPP economic relief. We're aware of that, but is there anything in this legislative change that we've heard about that we should be paying attention to?" And I said, my response at the time, we were in the middle of our tax season, so we were, underwater, buried, busy, and it caused me to pause. And I said, well, there's absolutely something there. But as I got to thinking about how I was going to respond to them, I started going back through the number of legislative acts that were passed, and it was frankly pretty daunting. At that point in time, we'd had 4 or 5 different tax law changes starting in December. And those tax law changes came on top of and reversed in many cases the most significant tax law change in my career that happened in 2017. And what that really did is it created a very complicated, complex situation to a very simple question. And that question led me to go, okay, how are we going to address that? And what we did was we pulled a team together, and the team at CLA said, well, how can we help clients? How can we simplify this? How can we help ourselves help our clients in light of all of that change and the complications? And so we started out with a tool that was focused on the COVID-19 economic relief and the COVID-19 specific tax law changes. And since then, we realized that it worked so well then that we would enhance it and modify it and build it out so that we can help clients address those issues right? The COVID-19 specific issues, but also help them be thoughtful and proactive as they approach their year end.
Yeah, so what do you think is most important about a year-end planning conversation, especially this year?
Well, I think especially this year, that's a great question there too, because what's happening today is, we're all locked in front of our computers. We've changed the way we work. It's pretty much migrated to a 24/7 environment. And when I talk to clients, their focus is on, figuring out how they can retain their employees, run their business, maintain some level of profitability, deal with all the curveballs that have come at them from so many different directions, and just stopping long enough to say, hey, we're going to carve out an hour or two to think proactively and strategically is not top of mind for them right now. Mm-hmm. So I think that it's important for all of us to do it. It's sort of a healthy, reflective thing to do, and because we still have time to influence the outcome in 2020. It's a perfect thing to be doing right now.
Yeah, and when we talk about year-end planning, it's really, in my opinion, more than just tax planning. So when we talk about being holistic, what are some of the areas we should focus on when we're having a year-end planning discussion?
Well, I had one of these discussions yesterday with a client, and the client thought that the topics we'd bring up were all going to be income tax related, because those are sort of the foundational things that we always do every year. And there's a number of those kinds of things that we do. We want to make sure that clients, fix their liabilities so that the things they want to deduct are deductible. We talk to clients about setting up retirement plans or modifying their retirement plans, or looking at their beneficiary designations. All of those are things that we would typically do in any given year. But in this particular case, I had used our tool to sort of create the agenda for the client, and we went places that they weren't expecting to go. And frankly, I don't know that I was expecting to go there. And there are areas in the client's world, whether they're individuals or businesses, that they are not aware of impactful changes that have happened. They're running their business, right? Their job is to do the things that they have to do there. And so we went into some subjects that they never would have thought about. And frankly, they're not tax and they're not audit or financial reporting related. They're economic related. They're taking time to look at things like, their telecom cost and finding a way to create a savings that didn't exist before that, frankly, it was out of sight, out of mind.
Yeah, so, Ben, one of the things that's really, I think, unique about this particular tool and this conversation is that, it can be filtered by industry. And I think that's important. But can you talk about why that's so important?
Well, when we started thinking about our clients and how we could help them, one of the things that came to mind was that as a firm, we go to market serving clients with an industry focus. And what that means is we challenge ourselves to be immersed at a very deep level, not just on a service line like assurance or tax, but to really get to know their industry and their business in a way that lets us hopefully look at it more aligned with how they look at it. And then as we do that, what we've recognized is that industry knowledge brings some very nuanced and in many cases varied ways of looking at economic, financial reporting, and tax. And so when we set out to improve this, right, and go beyond sort of the COVID relief, we said, gosh, we have all of these tremendous capabilities inside of CLA that understand the various industries, whether it's real estate or construction or manufacturing and distribution or transportation and logistics. We have people who really understand those industries. And we said, let's ask them about the things that they are thinking about, but that they believe their clients might not be thinking about. Right. So this is about CLA creating something that helps us help our clients in a way that we have this acronym for it. We call it the COAT tool, right? But really what that's a sort of an acronym for is it's a title, but it really represents us coming around and putting our arms around a client to help them identify things they're not thinking about. And so because we approach it from an industry point of view, we're able to do it in a way that's much more aligned with what's important to them and what their priorities are.
Yeah, I think that makes a ton of sense. Now, I know people are probably sitting there thinking it's a pandemic. We want to be safe. We definitely want to engage with people, but we want to do it in a manner that's safe. So how do we hold these meetings and balance that with being safe for people who want to know that we're doing it in a fashion that's also safe for them?
Yeah, so I'm a big fan of byproducts. And as we started to build this out, we realized, gosh, we're going to be doing this in a forum that we just haven't done before. Because typically we'd be in the physical office or the home, at the kitchen table or the conference room table, and we'd be talking about these things, right? Well, today we're doing it through a team meeting, or earlier in the year it was a go-to meeting, and so we're doing it virtually. And as we this thing out, we said we have to find a way to structure the conversation, do it in a way that's tight and concise. We can't take 4 hours to hold this conversation. The clients won't be able to tolerate it,
right.
Much less pay attention through that time period. And so we decided we'd do it through video meetings, not unlike this, but in a way where we would share a document on screen. And we use that document to actually ask the question of, is this item, and then we talk about what the area or opportunity is it relevant to you, and is it a priority to you? And frankly, the whole process is around taking what's a long list, because as I said, there's so many things to think about, right? And the goal is actually to go through that list very, very quickly, give people, the client, an understanding of what the topic is, and get to know, so that we can then get a short list of the yeses. The yeses are those priorities that they want us to focus on and help them with.
That's great. So, we talked about getting to the no's and getting to the yeses. Why don't we talk about maybe just a couple examples of some of those topics that might come up in a meeting? What are some of those no's and yeses and things that you're talking about?
Yeah, so one of them is in sort of the category of avoiding unpleasant surprises. And so in that particular area, it's something that we've seen the IRS continue to do more and more of, and it's in the area of reporting around partner information. And so the IRS is continuing to use the tax returns and the forms that we prepare and clients file to get more and more information that allows them to use what I call artificial intelligence in terms of being able to do desk audits. Well, as the IRS is getting smarter about that, they're asking the forms to provide more and more information. Well, avoiding an unpleasant surprise here is about realizing, 5 days before your return is due, that you're supposed to give the IRS this additional information that's brand new, and you don't have it ready, right? So that's not a good place to find yourself. So one of them is just that concept of focusing on an unpleasant surprise around compliance reporting. We like to bring good ideas to the client, right? And so one of those good ideas is and that's relevant today. I practice in the real estate area. Is what's going on in commercial leasing and rental spaces, and what's happening in that space is you've got tenants, that are having economic challenges, and you've got lessors that are doing everything they can do to keep the tenant in the building, be able to generate cash flow, pay their mortgages, and keep the doors open and the business running. So they're making decisions on the fly about how they do that in those relationships. And frankly, they're not thinking about, well, what is the impact of this on my audit report that's going to be submitted in the spring, that's part of my loan covenant? And then they're not really thinking about, well, what's the economic effect around this as it relates to the tax return? And is there something I can do to change the tax return outcome? Because if I can change the tax return outcome and pay less tax, that's a good thing. And so we have topics and ideas and concepts built into this in that particular category. Manufacturing and distribution is an area that you work in, and You know that there are a number of different law changes that came into play that then create these integrated sort of things that you have to think about, right? And so what we want to be able to do is help our clients see that there might be something to work on that can help them avoid a financial reporting issue in the spring next year before it becomes an issue. And as well, to make sure they're paying the least amount of tax and or generating refunds, because a lot of what came out as part of the COVID relief was about generating tax refunds. And we want to make sure we're helping our clients capture as many of those opportunities as we can.
Love that. So, we've got 2 months here and things are time sensitive. So if we've got viewers that are interested in scheduling these year-end planning conversations, how should people be doing that and engaging with us?
Well, that's real easy. If you're not a client, go to our website, claconnect.com, and you can schedule a meeting with someone. If you are a client, reach out to your CLA team member and ask about the COAT tool and the COAT process. We're going to be doing the same with our clients, and we look to be, and expect to be having a lot of these conversations between now and the end of the year.
Awesome. Well, thanks for joining us. We're going to keep you around for any questions that come up. And with that, we're going to pivot over to Jack Rybicki for some PPP updates. So welcome, Jack.
Great being here again, Leslie.
All right, Jack, let's start with a general landscape of the PPP and just talk a little bit about what you're seeing with forgiveness applications. Can you provide any update on what you're seeing from the SBA?
Yeah, unfortunately, we're getting extremely limited amounts of information from the SBA. In fact, most of the information we're getting is from lenders at this point who are telling us that, yes, they are starting to see notifications from the SBA, and some of them have actually started to receive funding from the SBA as well. So we're, quite frankly, a little disappointed that we're not getting any information yet from the SBA in terms of the number of applications for forgiveness that they've processed. More insightful would be if they have rejected any applications, why they're rejecting them, and things of that nature. There is an appeals process that happens or can happen if a borrower has forgiveness application rejected. And we were hoping that we would start to get some insights as a result of that. Again, we have no ability to see whether or not that process is starting yet. So if an application were rejected by the SBA and a borrower has applied for an appeal, right now, we don't know how we might learn about that. And so that is an area that we're going to continue to watch for. We would expect some information to come out from the SBA on this, but it's been pretty quiet. And I mean, if given everything going on with the stimulus talks that the Treasury Secretary is involved with, it's not surprising that we haven't seen a lot of new information come out from Treasury or the SBA, but hopefully we will see something soon.
Yeah, so, in the spirit of seeing forgiveness starting to be granted, and then, the fact that we've got Ben who's talking about year-end planning, maybe you can comment briefly on the pros and cons of when to file for forgiveness, because that's such a big piece of year-end planning.
Yeah. Yeah, so, right now we still don't really have much insight other than the existing guidance from the IRS, right? The IRS has said that expenses that get paid by non-taxable revenue, which the PPP forgiveness is revenue is non-taxable, then those expenses become non-deductible. From a planning perspective, what we believe is that if you have not received information about forgiveness before the end of your tax year, then you should be able to deduct those expenses in the current tax year. And then in the year you actually receive information about forgiveness, if the tax law is still the same at that point, then you would have to reduce your expenses in 2021, for instance, and then pay the tax then. At a minimum, you get the time value of money there. Now, with potential changes in tax rates, that's a consideration on the timing of when you want to do that. So obviously we'll have maybe a little more insight into that sometime next week or maybe later on in the month. And so that definitely is a consideration. Now, we are not seeing anything right now in any of the stimulus talks that would indicate that the overturning or coming over the top of the IRS is going to happen as part of the stimulus package. It has not been in any of the proposed language on kind of PPP version 2. And so we think that, barring something that would get included in potentially a tax extenders package or other thing, that might be a dead issue, although we don't know that for certain. So it's just not hot on the topics of conversation right now. So we're assuming that, eventually PPP forgiveness is effectively going to be taxable, but it will, depending on timing, you could defer it a year. There are a number of other things that we've talked about in the past. The one thing that I would continue to stress is the acquisition front, right?
Mm-hmm.
So we're starting to see a tremendous amount of acquisition activity. A lot of people are fatigued by COVID at this point, and now that they're starting to emerge, are considering selling their businesses. If you have a thought about, selling your business, that might drive PPP forgiveness timing for you as well, right?
Sure.
It's fairly easier to do a transaction without a PPP loan on your books than it is to do one with a PPP loan on your books.
Yeah, and so I think those are all really good considerations. And you hinted a little bit about legislation hopes that we may not see anything in a stimulus bill related to a change in the taxability and coming over what the IRS had done. We've got a big election coming up. It's sucking up a lot of the air right now for a stimulus bill. But any other updates you can give us on the status of a stimulus bill right now?
We're still seeing, bipartisan support for the business piece of stimulus, right?
Mm-hmm.
That hasn't been an item that's kind of, been debated, recently by any means. In fact, even in the skinny bill that the Senate wants to pass or is willing to pass right now, it's included in there, right? So, we do believe that ultimately when a stimulus bill passes, and we do believe there will be another stimulus bill, regardless of the outcome of the election next week. We believe that PPP version 2 will be in there, and it will likely include some of the fixes that we would like to see related to PPP version 1 and forgiveness. More specifically, that $150,000 loan value and streamlined forgiveness for that. The SBA did come out a couple weeks ago and they did implement a streamlined forgiveness process for loans under $50,000. And that was a new threshold that was introduced in the last version of the HEROES Act that the House passed. I think Secretary Mnuchin obviously felt comfortable throwing in the $50,000 number given that new small layer, and that affected like 3.6 million loans. So that was a huge relief to the banks and a huge relief to, small businesses that were out there. But there are roughly another million loans that sit in that increment from 50,000 to 150,000, right? So we hope that, we get that kind of relief as well. I know the banks are pushing for it. Many small business organizations like the U.S. Small Business Chamber and others are in favor of that. And so, again, we think that has bipartisan support and ultimately will be part of a stimulus bill when and if it does pass.
Yeah. So, I think those are some good updates, just kind of on the overall landscape of everything. And sticking with that theme, what are some other things that your COVID relief team has been seeing specific to applications and filings that the viewers may want to keep in mind and be aware of as they're processing and starting to file applications?
Yeah, so, because there's been a lack of new information coming out there, people are now starting to really dig into kind of the existing guidance that we have. And now people are starting to think about forgiveness. So we're starting to see a lot of kind of niche questions come up. So specifically, we've talked in the past about the whole double dipping issue, right? So if you're a nonprofit or a healthcare organization and you're getting federal reimbursement, you cannot get both federal reimbursement and PPP forgiveness for the same dollar of payroll. So now we're starting to get a lot of questions about, well, okay, how do I now plan which payroll I report for my PPP forgiveness and which payroll I report for reimbursement under my federal grant dollars, for instance? And how would I go about doing that? There's no guidance out there on how to do that. You obviously have to report all of your payroll information for PPP because you need that from an FTE perspective. But we are starting to see some folks get fairly creative in terms of presenting it and then backing out certain components because those are covered by other federal award programs or healthcare reimbursement programs, things like that. I saw a question come through in the chat about R&D credits. And that's another topic that came up recently related to this, that if you are a company that takes advantage of the R&D credit, but you didn't actually pay those employees because they got paid by the by the PPP proceeds, can you use those dollars for your R&D credit? Again, these are issues now that people are digging into this. We're starting to see them come up. Unfortunately, we don't have a lot of answers now. So as people get into this more, I think our list of questions grows, but our list of answers unfortunately does not. Couple other things that we did here, and one that was solved for us. If you've ever noticed the forms themselves, most of the forms on the PPP forgiveness application, the 3508 or the 3508 EZ, and now even the S form, all of those have an expiration date of 10/31/2020. We had a number of borrowers that were fretting and that, like, oh my gosh, the form expires on at the end of this month, and if I don't get it in by 10/31, I'm not going to get forgiveness. Fortunately, the SBA, I guess, must have also been getting a lot of those questions because they put an FAQ out there and said, guys, that's just a date for administrative purposes. It has nothing to do with true expiration of a program or your ability to apply. Don't worry about it. We'll update the form. You can continue to use the form. The date doesn't mean anything. So that was an issue that a lot of our folks were concerned about. And the one other one that we're getting a lot of questions about has to do with the interest and principal deferral period. So if you remember back before the June 5th PPP Flexibility Act passing, the original terms of the PPP program were that you would get a 24-month loan with 1% interest, but you had no interest and no principal due for 6 months.
Yep.
And effectively, that kind of said you really need to apply for forgiveness within that 6-month period, and that way you would know what you had to pay back after 6 months. Well, I think Congress realized in the Flexibility Act that that was not going to be feasible, particularly when they extended the covered period to 24 weeks. And so as a result of that, what they've done is they changed the timing of when you have to start repaying your loan. Now, banks, though, because of prohibitive costs, did not go back and amend all of those loan agreements. So a lot of our borrowers are sitting there with a loan agreement that originated in April, and they're looking at it saying, well, geez, this thing says I need to start paying my loan now. And the good thing that we know, and again, the SBA came out with guidance on this. They said that the new provisions, basically the fact that you have 10 months from the end of your covered period, and as long as you apply for forgiveness within that time, you don't have to start servicing your loan or paying it back until you find out whether or not or what your forgiveness amount is going to be, right? So basically you could have really up to about 15 months before you will have to start paying your loan back if you don't even apply for forgiveness. But then if you do apply for forgiveness, you won't have to pay anything back until you know what your net balance is that is repayable. And so, Not all the banks, like I said, none of them that we're aware of actually amended agreements. They're all just kind of operating under a forbearance agreement that they're not going to execute on the terms of their original loan. So, if you have concerns about that, please contact your bank there. But we have not heard of any banks trying to enforce the original loan provisions at this point.
Well, those were some really awesome updates, Jack, so thank you for that. I do want to take a couple of the questions that we have been receiving from the live Q&A. I do want to bring Ben back for just a moment. So Ben, we have a question from one of the viewers related to the quote tool, and their question is, as you've been using this tool and engaging with different people, what were some of the surprising or, uncovered savings areas that maybe were less likely that you uncovered in some of your conversations that people should be thinking about?
Oh, Leslie, that's easy. So one of the areas in the tool that's an opportunity is in the tax credit space, both federal and state tax credits, and so those will sort of pop up automatically when you start using the tool. And the one that inevitably comes up and is this federal tax credit that's generated under what we refer to as the work opportunity tax credit, and it covers, I think, 9 different categories of employees, and it's a credit that they are going to use because they're paying payroll taxes, right? And so
Yeah.
Inevitably we'll get to that, and they're going to go, the client, if they don't already have it in place, they ask the question, what is that and why aren't we doing it? And it leads to a follow-on conversation with them in one of our experts in the WOTC area.
Awesome. So thank you so much for clarifying that. And I think, it really is going to depend by industry, but those are some of the things that we might be able to uncover. So it's worth that deep dive. So we have another question related to the PPP. So Jack, this one is for you. And we talked a little bit just about strategies related to the timing of forgiveness. And we have somebody who has asked the question, do you recommend that organizations hold off on submitting their application of forgiveness until there is solid SBA information? And man, solid is really a loose term here.
It truly is. It's, we've been on a kind of a shifting landscape now since late March, and I don't really expect us to ever have all the guidance we'll like to see. The one thing that we could get some clarity on, though, that would be helpful, could actually be part of the next stimulus bill. And so, depending on the timing of that, we could get some guidance. The new stimulus package, the wording that they had in there actually fixed some of the problems related to the covered period. We've got either an 8-week or a 24-week covered period, but then the SBA said, well, you can file early if you want, but they didn't really tell us how to do that now. The fix in the PPP version 2 that applies to the earlier one gives you the opportunity to select your covered period. So if you only want to use, for instance, 10 weeks or 12 weeks of expenses, you would actually get to say, my covered period is only 12 weeks. So as long as it's between 8 and 24, you'll be in good shape and you can actually use that period. That would be extremely helpful. That answers just a ton of questions about, what is the maximum eligible amount, using that $100,000 limitation. How do I do my FTE calculations? What if I fired somebody after I captured the expenses, but before my application date? There is a lot of uncertainty out there on that right now. And clearly, if they pass that, that would give certainty. I don't foresee the SBA coming out with a tremendous amount of guidance on it, but maybe that next version of stimulus does help us out with some of those things. Absent getting that guidance, though, I think if you just move forward with your application in the time that makes sense for you based on other factors and use your best judgment, right? Work with your bank and do those things, you're going to be all right as long as you're not trying to be egregious and game the system. So I wouldn't hold off filing just because of that issue. I would, I would use the tax issue or potential M&A or other things as the driver for timing.
I think that is really good advice. Well, unfortunately, that is all the time we have for today. The awesome thing about this new Q&A feature that we've got going on is that if we didn't get to some of these burning questions, we can follow up via email. I do want to thank Ben and Jack and our moderators who have been live with us today in that Q&A. And thank you for all your engagement and questions. You really make our show engaging and really help guide us to what are the important topics and issues. So thank you so much. Please register and engage with us. We love having you be part of that conversation. We did also want to let you know just to reach out to your CLA relationship or contact us and have that year-end planning conversation. We've got 2 months and we can make a lot of moves and headway and really get to some good results for you. So go out to our website and also register for year-end planning webinars. And we look forward to seeing you next week, where we're going to continue our conversations both on economic relief topics and also gearing up for year-end. But until then, stay safe and healthy and have a wonderful weekend. Thank you so much.